And now we'll be moving forward to our next presentation. Our next presenter is Abhishek Saurav, who is a senior economist at the World Bank, and he's a senior economist with the Global Investment Climate Unit of the Finance, Competitiveness and Innovation, a global practice of the World Bank's Group's Equitable Growth, Finance and Institution Presidency, and he currently leads global research to investigate the effect of COVID-19 pandemic on the private sector. And he will be sharing his expertise on leveraging emerging technologies to drive customer-driven digital transformation. So let's welcome Abhishek. Hi, Abhi, can you hear me?
Yes, I can hear you. Thanks for hosting me. Could you please unblock my video so that I can begin my video? Yeah.
Sure.
Thank you.
Just wait for a second. Hi, how are you?
I'm doing well, thank you. I hope the audio and the video are fine. So from a technology point of view, we should be fine. Roma, can you please confirm how many attendees we have and how much time I will have for this session?
Right now we are having the attendees I can see are I think 15, but there are so many attendees, and we will be having the list after the event. So I will be sharing the list with you. Okay.
Excellent. The reason I ask is for planning for the question and answer session. So that's all fine. So I'm ready to begin whenever you are.
Okay, yeah, sure. I can perfectly see your slides now, and thank you so much for being here and for taking out time from your busy schedule to share your expertise and knowledge with us. And we are looking forward to have a great session. Stage is all yours now. Good luck.
Excellent. Thank you very much. Friends, my name is Abhishek Saurav. I'm a senior economist at the World Bank. Economists work on a variety of things. I work on mainly private sector development, so harnessing the potential of the private sector for growth and development. The focus of our work is primarily in developing economies, but some of the issues that we'll be talking about today in terms of emerging technologies and its effect on customer-driven digital transformation, I think that transcends both developing and developed economies. So I have a few slides, and then hopefully we'll have enough time for questions and answers. And if somebody wants to come in, I think it should be okay coming in the middle of the slides as well. So the first thing I want to kind of set the stage with is that emerging technologies have become certainly more affordable, so the cost has gone down, and they can be applied in a wide variety of settings. So there's complementarity between the different technologies that have come about. What we have here on the screen is an adapted version of a depiction from the World Economic Forum, which outlines the major big technologies we talk about. This is definitely not an exhaustive list, but certainly indicative of the major digital transformations, computing transformations that are happening. These are artificial intelligence, autonomous vehicles, big data, blockchain, robots and drones, social media, and others. So we're in a unique world. In no time in history have we had so many transformational digital products kind of evolving at the same time. And part of that evolution has been that while individually these different technologies are maturing and being able to be applied for the various end users, they also have tremendous potential to work with each other. The best case, I think, for illustration here could be the idea that we have autonomous vehicles, and they don't just use their own smart technology, but it's also connected to the various other devices that you may have. So simultaneously, while you're engaging in one technology, you're also then connected through to other technologies. What this means is that the experience that you're then having is tremendously more customized because there is no standard use case. In this case, the use cases are many. So let's unpack some of these emerging technologies and how they have become so widely used and why the potential is so high. I think the first reason for that is the cost aspect of it. The cost of these technologies is decreasing. I think some numbers tell us that they have decreased by a factor more than 100 in the last 10 to 15 years. So things used to be quite expensive. For example, drones used to be in dozens of thousands of dollars as recently as early 2000s, and now you could buy a very decent drone with multiple capabilities for less than $1,000. So that kind of demonstrates the cost differential and the cost curve that we have on some of these technologies. And that has an effect because then affordability is affected as a result of cost. We also have the idea around application. So a lot of these technologies have emerged from the testing and the piloting phase to actual implementation in serving customers in a variety of businesses. Again, we can look at the example of drones being used in the medical field. It's being used in disaster management, for reconnaissance, aerial imagery, and so many other uses. So it's actually the end users across sectors. So that's quite powerful. And the other aspect of this application is that a variety of these technologies can interoperate. So the combination that we see is quite powerful, because when big data combined with the Internet of Things, combined with artificial intelligence, it gives you very different type of new experiences, and probably beyond what was originally envisioned when individual technologies were growing and going through the growth phase. So the dynamic combination of two or more factors that we see has led to very high rates of technology access and adoption. This, I think, needs to be put in some context, that technology adoption has been a problem because cost access inhibits individuals, businesses, households from accessing the technologies that they would like to. But I think in this arc of time, we are at a place where both cost and its magnified application enables us to have a much higher adoption of these emerging technologies. Another powerful statistic that I want to share with you is that as of now, we have about 8 billion connected devices in the world. And in the next only about 8 more years, this number of devices is expected to go up to 1 trillion. And you can imagine the kind of impact this is going to have on manufacturing, services, the amount of data that is going to be generated, and the amount of data that needs to be processed on a regular basis to enhance the customer experience. So I wanted to give you some background on these technologies and the reason why they have become more widely usable. So I'm going to move to the next slide now. On this slide, I want to talk about how emerging technologies are transforming business models and firm level production process. So in the field of economics, one of the things we study quite closely is the firm level production process, because it's quite important in terms of both efficiency and the quality of the outputs that come out. So the first observation I want to make is that the technological advances we are talking about, let's consider, for example, the ones you have on the screen, are disrupting a variety of business models and changing the production process. We know that the technical aspect of these different applications shapes the production function. What I mean by that is, both informed by theory and empirical evidence, we know that technology affects the mix of factors of production, that is capital and labor. So when you have technology coming in and rapid technological progress, the dynamic mix of these two production factors needs to be reconsidered. And this really matters both for businesses and individuals as consumers, because input use becomes way more efficient with the use of technology. The cost of production usually falls because of better use of inputs and resources because of their cost, and the margins can be improved. So this is the reason I'm unpacking for you, I think, why businesses are so keen to invest in these technologies and leverage these technologies. Because after all, it is about margins, that is profit. Because the use of these technologies can really deliver value both for the customer and in most cases, at the same time, increasing profit, the profit margins for businesses. And the other implication of this shift, this rapid technological change, is that production is no longer asset heavy. That is, with very light modes of less capital intensive production processes, you could actually see quite a bit of value being created in economies. And this, we are interested in this aspect because this allows developing countries which have less capital intensive production assets to actually join the game. That is, applying these technologies to the extent that they can and readily jump into these technologies, they could actually leapfrog. The concept of leapfrogging comes from this observation about being asset light. On the next slide, I want to spend some time on how these emerging technologies are transforming customer experience. So I've set the stage on the business economic side of it. Now I want to spend some time on articulating the different channels through which emerging technologies can affect experience of customers in businesses. Now, one would imagine that sectors and businesses are so diverse. How could we have common channels across? But if you take a closer look, we find that there are many the various channels, but I think these are the three main channels that I can identify from literature as the link between technological change and customer experience. So let's look at them one after the other, and then we can probably discuss a little more on these ones. And I have a few examples to kind of explain these different channels. So we know that technological change enhances connectedness. So the element of connectedness is really important. And let us take the example of artificial intelligence, Internet of Things, SM is social media, which enhances the interface between businesses, customers, and the devices through which we acquire information or do our business transactions. The multiplicity of the different channels that we have to transact, including the availability of bots, makes this connectedness not just limited to hours of business, which may vary across geographies and time, but a 24/7 kind of experiences. So I think in terms of recent history, in engagements between customers and businesses, we have never been so connected. There's potential to be connected all the time with the use of some of these technologies and multiple channels through which you could be able to communicate and transact with businesses. So that's the first aspect. That's the first channel. The second channel relates to value, savings, and efficiency. By value, I mean the value capture that businesses are able to have and the value that customers are able to derive from the product or the service, and the efficiency with which all of this is happening. So take, for example, the case of bots and artificial intelligence. Both can facilitate low-cost transactions in delivering value. So the bots essentially replace human roles in business, and artificial intelligence automates some of those things which can be automated, that is repeatable processes and things that are more simple to execute without human intervention. And this results in greater value. And big data analytics can identify optimal solutions without, again, human intervention to analyze some of these things and more efficiently resolve some of the customer's needs. For example, this is most readily applied these days in the healthcare industry, where big data is being used to identify what type of interventions should be made as a pre-identification, as a pre-information session before humans, that is medical professionals, get engaged. And this is quite powerful. It can revolutionize both the quality of information and the quantity of information available to the customer, in this case, the individuals. And the third channel we have is information access and the security aspects of information. By that, what I mean is, for example, social media, artificial intelligence, chat boxes that we commonly see these days in customer interfaces, and big data can catalyze and customize product information and purchase experience. What I mean by that is the way you accept information, access information, accept it, and transact is fundamentally changing with the combination of these different factors. There's social media, adjacent to artificial intelligence, adjacent to chat box type of functions, which allow you to more closely experience in a digital environment the products that you're interested in and learning more about the market and the prices. While this is data intense, we also know that with the right kind of network architecture and the security architecture, all this data intensive processing can at the same time be secure. Because one of the things we have removed in that whole application of this technology is that we have removed the human error factor. We're not saying that there are no humans involved, but to the extent that some of these repeatable processes have been adapted for technology and technological change, the human element has been removed and it is less prone to that error. So this is kind of a complicated and a long slide. So I want to see if there are any questions questions or clarifications at this stage. And if there are none, then I'm happy to move probably to the next slide. Are we doing any questions and answers, or should I move forward? Okay, looks like no questions at this point, so I'm going to move. I don't know if you're muted by the organizers, but I hope that's not the case.
Hi, Abhi. They will be asking you the questions in the chat or in the QA session. Okay.
All right. If there is something in the chat window, please do let me know, because I don't think it's available to me. Okay. It's not visible to me yet.
Yeah, there are no questions yet, but if there will be any, you can see them in the chat.
Okay, great. So I want to, this is the last slide, and I want to spend a little bit of time on this because I think there's a lot of enthusiasm about technologies and how that affects customers. So we tend to exaggerate the positives and talk less about the complicated side of rapid technological change and rapid deployment of digital technologies in businesses. The first one, I think, relates to and widely recognized and relates to privacy and data security. The risk of data protection and leakage of personal data is a fundamental problem in businesses, especially in businesses. Less so when these transactions are, let's say, between individuals and governments, because there's a different set of agreements. But when it's with businesses, the frequency of that exchange is quite high. So there's a lot of personal information that is being generated. For example, whenever you're using a cab service such as Uber or some similar service, each transaction results in a lot of personal data being created. And what this means is that it can actually compromise the digital architecture of customer experience and undermine business performance. So if that data leaks and data protection is compromised, both the experience is diminished and business performance also at the same time is undermined. So this is a major risk. I think businesses spend a lot of money in ensuring that there's privacy, data security according to rules of where you're operating. But I don't think there's any durable, permanent type of solutions to this. So this is an area which I view with a lot of skepticism and a lot of concern, because I don't think there are any full solutions at this point. I don't think we are anywhere close to full solutions. Some of the common issues that relate to data protection are about data exclusivity, the idea around encryption and how complicated and how complex that has, and the implication on business processes of encryption, and then data localization or retention, that is the geographical and the spatial aspect of where data is going to be stored, processed, analyzed, and the rules around that. So this, I think, is a major vulnerability area in the fuller extent of leveraging the digital technologies. Similar to that, there's the area of cybersecurity. Now, this is again gets a lot of media attention, but the idea here is that controlling access and excuse me, and integrating and ensuring integrity of the digital platform that you're operating is a permanent problem, is a key business challenge. I don't think, again, in this case, we have foolproof measures. There's a big business. This is an industry. Cybersecurity is a technological industry on its own, but it is a key vulnerability and it remains so, especially for technology-driven firms, which are more susceptible to this as compared to, let us say, production, which is more traditional and brick and mortar. Small errors in this case can have magnified impacts depending on the type of the sector that you're operating in and exact very high business costs. Sometimes these business costs are direct costs, that is, they result in requirements of ransom payments or extortions related to, a compromised position in business. But on the other hand, a more common occurrence is the suspension of service for prolonged duration. So whole systems can go down if, from a cybersecurity point of view, a business is compromised. So that's the nature of the problem. And this problem exists, I think, is particularly more intense in businesses that have financial systems and service firms, because the vulnerability is greater, because this is financial information and financial transactions being processed. The vulnerability is higher to both the likelihood of attack and the intensity of cybersecurity threats faced by those type of businesses. And finally, a major risk and a compliance burden on businesses is around the regulatory side of things. So the risk of compliance with regulations often varies across national boundaries. So the set of rules in different countries is different, and sometimes those rules also change within countries for large countries. And this can present significant risks for multinational firms or global firms which operate in multiple jurisdictions. And this has the implications related to both penalties and licenses. So penalties meaning you can very easily be violating a set of rules, although you're the same company with multiple branches. You could be in violation in one country, not in the other, which will result in penalties. And then in a more extreme example, what could happen is your licenses could also be compromised because you have involuntarily, inadvertently breached a condition or a contractual requirement or have not complied with the contractual requirement. And since regulations can also vary by industry, so it doesn't just vary by geography, but it also varies by industry sector, then and product categories, that this risk is heightened for some businesses who try to create value in multiple sectors. Especially again with multinational companies, we see companies are involved across sectors. So different sets of rules for different sectors, different sets of rules for different countries. It gets complicated very quickly, right? And it becomes quite layered. So that's a compliance burden. One of the examples that I wanted to share with you relates to transportation and information technology. What this would mean is you would have requirements to comply with the transportation sector, regulations of which will be quite different from the regulations that govern conduct in information technology and IT-enabled services type of sectors. So the regulatory problem is also quite complex and a major cost center for businesses. So that's what I had in terms of sharing information with you. And Roma, I think if the time is right, you can open it up for questions and answers. And I see there may be a question in the chat window.
Hi, Abhi. Thank you so much for your wonderful presentation. And we do have a question for you in the chat. And that is, which of these three do you see as most difficult to overcome or find solution for?
So I believe the Regulatory means the problem areas. Um,
Ye-
so privacy, data security, cybersecurity, and the regulatory aspect of things. Um, I don't know. I haven't thought about this in any type of prioritization, um, but I believe so. Depending on how we define it, maybe we can define it by the magnitude of the effect, that is the magnitude of the problem, versus the frequency of the problem. I think cybersecurity would be the one which would qualify as the one that is more persistent. So to the extent that I'm informed, cybersecurity is a daily concern, especially for technology-intensive digital firms. So what that means is that anytime you're in operation, which is 24/7, 365, you have the threat of cybersecurity. So the frequency of the problem is quite intense. At the same time, the magnitude of the problem, the intensity of the problem is quite intense as well. And the reason for that is that it can cause a complete paralysis of your system. That is, if you're not able to continue service um, in a predictable, consistent type of manner, then I think it undermines the basic premise of the business of being able to serve your customers throughout different time zones and such. So I think I would pick cybersecurity as the number one concern. The second, I think, would be regulatory, and the third would be privacy and data security. And I say that because for privacy and data security, there's already quite a bit of movement around the world. For example, in the European Union, we have the GDPR data protection regime, and there are different regimes in different parts, but there's some convergence now happening on global standards on data protection. So I think I would place that as the third in that list. Regulatory would be the second. So I hope that satisfies the question. Most welcome, Robert.
Thank you so much, Abhishek, for your informative session and for answering the questions. We are really honored to have you here and looking forward to work again with you. And
All right. Thank you very much. Thank you for
thank
having me.
you. Thank you. And I'll ask the audience that if they're still having any question, they can ask you in the chat or in the QA session. Okay.
All right. Thank you very
Thank
much.
you. Have a great day.
You too.